U.S. markets rallied after Trump held off from imposing new sanctions or tariffs on China. Investors aren't fans of the escalating trade war between the two countries. President Trump made the bombshell announcement today that Hong Kong's special trade and economic relations with the U.S. are no more. What does this mean for Hong Kong, China, and the U.S.? An expert explains.
The U.S. treats trading with Hong Kong differently than with mainland China thanks to the 1992 U.S.-Hong Kong Policy Act. Revoking that status has major implications for the city's role as an international financial center. The region is also home to many international companies' headquarters. Over 1,300 U.S. companies operate in Hong Kong. Of them, nearly 300 have their regional headquarters in the city. And over 85,000 U.S. citizens live there.
Most of these people might need to leave the city, and their leaving would mean large amounts of money, and corporations will leave with them.
The revocation will also hurt China's foreign investment. Hong Kong has long been China's gateway to attracting foreign investment. It accounts for 2/3 of China's overall foreign investment inflows, but now they're at risk following Trump's announcement. The city is also a major destination for the initial public offerings of Chinese companies. That's where mainland Chinese corporations, including many state-owned firms, raise funds from foreign investors. Beijing's new law could cause Hong Kong's stock market to lose foreign investment, prompting suffering for Chinese companies. This comes as Washington is already tightening its regulations for Chinese companies to be listed on U.S. indices. The revocation also affects U.S. technology exports to the city. Currently, the U.S. is much more lenient with Hong Kong than with mainland China when it comes to exporting sensitive technology. That's in part because China remains under sanction following the 1989 Tiananmen Square massacre.
Through the Transfer Center of Hong Kong, the Chinese Communist Party can indirectly acquire many sensitive technologies from Western countries. Many of these technologies can be used for military purposes. If Hong Kong lost its special status, this channel for the CCP to get advanced technology is basically cut off.
The United States is Hong Kong's second largest trading partner. A revocation of Hong Kong's status will unavoidably impact U.S. businesses' interests there.
So it will have an impact on the U.S., but such impact is relatively small compared with the effect on the CCP. Under the bigger picture of the U.S.-China clashes, it is actually impossible for either side to strike the other without affecting oneself. This is in fact impossible right now.
Despite rising concerns, Trump didn't mention any change to the Phase 1 U.S.-China trade deal. He also didn't comment on the possibility of stopping the free exchange of U.S. and Hong Kong dollars, which could have massive effects on both Hong Kong and China's economies. Protesters in Hong Kong see Beijing's reliance on the city as leverage to argue for their freedom. That's why many pushed the U.S. to pass the Hong Kong Human Rights and Democracy Act last year. That act requires an annual review of Hong Kong's autonomy to justify its special status. Hong Kong student activist Joshua Wong recently wrote on Twitter that if the U.S. no longer treats as a separate customs territory, will our economy suffer? Of course, yet the hit is necessary. For decades, Hong Kong has facilitated the influx of global capital and otherwise unavailable goods, high-tech products into China. Leaders in Beijing continue to reap the benefits of this arrangement while our freedoms deteriorate. They can't have it both ways. Reporting by Penny Zhou, NTD News.